Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ken Van Leeuwen, founder and managing director of Van Leeuwen and Company, with his second half of 2020 outlook in what's been a year that no one expected going into it. In fact, our entire way of life has shifted as a result of the COVID-19 pandemic. Ken, it's great to have you with us back on Trade Talks.
Nice to be with you, Jill. Thank you very much.
You got it. And you're cautiously optimistic for the remainder of the year and expect some volatility going forward, but more near term, what are your expectations for the second quarter and looking towards the remainder of 2020?
Well, I think one of the things is that we can tell us what's happening today, and it really started earlier in the week. We're seeing a rotation right now out of the high flyers, the big gainers, and we're seeing it more go into the value names today, particularly material stocks and utilities. So we're definitely seeing a shift and profit taking in the big cap stocks like Microsoft, Apple's, Adobe's, those type of names.
Ken, let's discuss the perceived disconnect of the stock market relative to economic activity. What are your thoughts on the strength of the consumer and jobs?
Well, it doesn't, the consumer, frankly, is weak on the whole. I think one of the benefits that we're seeing is that people are saving money because they're not going out to eat, they're not traveling, their way of life has been altered somewhat. But then again, you have the folks who aren't working, who are like, thankfully, I'm able to still work. But the perspective of it is that, you see these restaurateurs, right? You see the travel companies, the travel agencies, all those, airlines, cruise lines. I mean, they're definitely struggling. And then, of course, you see the folks who have just lost their jobs, and now they're in danger of losing the governmental program at the end of July. So that is going to be an interesting dynamic because we are seeing a disconnect, Jill. I think what we've seen is the market continues to go up. And of course, the market is a forecaster, right? So is the market telling us that things are going to be good in 6, 9 months, a year from now? Well, of course, that's what will have to be seen. So there is a definite disconnect.
Well, let me ask you about monetary policy and fiscal stimulus, which has been deployed in an unprecedented way. How is that going to impact the economy? We're going to have to pay the piper at some point, right?
Yeah, that's what they say. But if we go back to 2008, right, and when Ben Bernanke began his programs and all the various QEs, we haven't really paid for that yet. So the question is, are we going to ultimately pay? The wisdom is, of course, yes, that we will someday at what time pay. But right now, because the economy was shuttered so badly, it's going to take us a while to get back on our footing. And it's kind of like we're running on oxygen, for lack of a better word, and being stimulated by the Fed and various fiscal and stimulus programs. And then we can't ever forget the late, great Marty Zweig, who basically told us way back in the day, never fight the Fed. So let's not fight the Fed in terms of if you're investing people's money like we do for clients.
All right. And Ken, any thoughts around the presidential election in light of COVID-19 and the response from the administration and tensions from China?
Well, that's going to be the million-dollar question, Jill, right? Because clients aren't really talking about it yet, but here it is. It's mid-July. It's still the summer, but as we go through the summer, and especially when we begin to go to September, the presidential election talks will certainly heat up because it's very clear that one side favors one type of policy and other side faces definitely different policies in relation to money and the economy. So I'm also looking like right now, Jill, to say, well, are profits being taken in some of these high-flying, I won't call them high-flying, but stocks that have been successful this year, let's say like an Apple or a Microsoft, because people are concerned about a potential Biden administration, and he's already said that he's going to want to raise taxes on the higher income earners. So that's going to include capital gains taxes. So are people being a little presumptive? Possibly. We haven't seen that yet. But as we go through further and further along we're definitely going to get indications of how this is looking from from an election process. Because right now we saw a poll yesterday, I believe, where Trump was down about nationwide, about 11% in the polls to Mr. Biden. So it's going to be interesting to see how this all plays out. With relation to China, of course, China right now has gone a little bit off the back burner in terms of the trade talks and everything of that nature. Of course, we know that Mr. Trump wants to blame them for the coronavirus. Whether or not that's valid or not, that's not for me to determine. But what's happening a little bit is tensions, relations have definitely cooled between our countries. And the tensions are still there with China. And China, it's even rumored today that they're working through corporate CEOs to basically to put pressure on the administration to basically bow to them a little bit. And especially that's coming through with what's going on in Hong Kong. Of course, because we knew in the spring when they were rioting, or winter when they were rioting in Hong Kong, then it went quiet. But now, the Chinese government has imposed some severe restrictions on people in Hong Kong, and that's all only causing more unrest between the two countries. So we are at somewhat of a stalemate. And of course, people who oppose, are pro-Trump, saying, yeah, well, of course China doesn't want Trump to be reelected because, he's going to be strong-minded with us, when we know that the Biden administration or prior administrations that he was affiliated with were more friendly with the Chinese. So it's really a big confluence and quagmire of events, for lack of a better word. So we're in for some volatile times, as we still believe. But remember, Jill, people don't have other avenues for money right now, right? You can't go to the bank and buy a CD. You can't put your money in a money market and expect to earn any income. So people are looking, and that's why maybe we're seeing a shift right now into stocks that are dividend payers, like the materials stocks, like a Union Pacific or a Air Products and Chemicals or something of that nature.
Yeah, especially with rates that are going to be low for quite some time. We certainly have had a lot to digest in 2020. Ken, it was great to see you. Thanks for joining us on Trade Talks.
Good to see you, and thank you much. Bye-bye.
All right, you got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.